So we wait a few seconds to make sure that the systems are working for this very important Q1 earnings call of Rocket Lab.
Yes.
So by the way, guys, if you see the presentation come out, please let us know. I'm having an eye on it, but I don't know if it's because I'm in Europe, like it's usually like the Americans are like, it's out, and then it takes 5 minutes more for me to also get it.
It has to come across the big cable that Google laid across the Atlantic. Maybe it comes from the Pacific side, they are on Long Beach. You never know.
Yeah, I don't know.
But yeah, good afternoon, everybody. Yeah, I was just telling Vince in the background and Scott, I was just like, man, the hope, like people always ask me, like, when are you going to sell? When are you going to sell? And my thought process is, well, if I do this right, I'll never have to sell, right? The opportunity is that, I could live off a couple percentage points here or there, not just of Rocket Lab, but the entirety of the portfolio. And so, and I think more people should take that stance, like we're here to accumulate great businesses and companies. And the hope is that over time, you can use it more as like a portfolio management piece and not sell per se. I mean, yes, if you need to do certain things, or if you think the company is fully valued and or your philosophy changes on the organization, then of course, by all means, sell. But I think so many people take this mindset of, oh, I need to get in and get out and have this trader mindset. It's like, to me, I mean, when's the appropriate time to sell Microsoft, right? People probably have thought about that for the past 10, 20 years. They said, oh, I'm going to sell now. I'm going to sell now. I'm going to sell now. Well, I mean, granted, Microsoft has gone through its own transitions as a company as well. But if you were fortunate enough to hold from 2000 to 2013 and Satya Nadella, came in, you've 6x'd over the past 8 years with Microsoft. So it's always kind of a question is like, when do you get rid of some of these high quality companies that truly are foundational in our country's history? And to me, sometimes the answer is never. A lot of people have been asking Matt when he's selling Palantir. I'm like, I think it's $1 trillion company. So why would I sell before it's worth $1 trillion? So like, well, what if it gets to $1 trillion in 3 or 4 years? So I'm like, well, in 3 or 4 years, maybe I don't think it's $1 trillion anymore. Maybe I think it's worth $2 trillion. And same thing with Rocket Lab, right? I used to think Rocket Lab, $25 billion company over the past couple of years. And now we've gotten a little bit further along. We've demonstrated more capability. The space systems has grown. Now I think it could be a $50 to $100 billion company.
Figures are out, it looks like.
Oh, shit. Let's go.
Let's see. Not on my end. You guys can share it in. No, I said not on my end. It's not coming through the cable, as Matt said. Do you have it?
Oh, I sent the wrong link. Hold on 1 second here. Oh, yeah, I do have it, though. I'll start to share in just 1 second here.
Scott just wants us to use his YouTube link and watch. That's what he sent. I'll watch through your YouTube link, Scott. How about that? I'll click the ads, too.
Okay. Let's see, and let's go through it together. Do you guys see my screen?
No, I'm still seeing the three of us. Oh, it's changing.
Yeah, there, yeah.
Beauty. Let's do it.
All right. So here we go. Full space value chain. Future, near, present. Okay, neutron, flatellite. I don't know how fast or slow we should go. You guys can cut me off anytime you want to.
Okay. I'm seeing flattellites in the near part, the middle part. Future, near. Okay, I don't know. I don't know what to say. I'm excited. Sorry, I'm muting so I don't say anything stupid.
So 122.6 million Q1 revenue, one of our highest quarters ever, up 32% year over year. Launched 5, booked 8 flights. That's pretty good.
$122.6 is good. It was on the high end. The 123 was their peak, so it's not bad. That's like it's maybe even less than 1%. It might just be flat. Let me see.
Okay, we go to the next one. Section 1, Electron. 100% mission success for multiple customers. Yeah. A decade of small launch. 10 years of American dedicated small launch, 2015 to now. It's funny because if you say small launch, then you can exclude SpaceX. And then this pie chart looks amazing. Wow, Northrop Grumman is quite successful. Only one failure out of many launches. New hypersonic contracts. So this is very interesting. HASTE on-ramp to compete for multiple defense contracts. The 1.3 billion HTCDF with the United Kingdom's Ministry of Defense, and 1.45 billion Mach 2 TB 2.0 US DoD through Kratos. And the first launch already awarded in Q1. You guys feel free to chime in with whatever you want to say.
I was just going to say, I noticed it says 7 launches awarded in total for HASTE across Mach TV. So that's kind of that is direct confirmation that every HASTE launch launched and in backlog have been. Wait, no, hold on. Would it be missing one? I'll double check that. But yeah, it seems like most, if not all, are Mach TV. I think one is outside of that.
All right.
The headline number has just been printed. So some places were reporting analyst expectations of -10 cents. Some were reporting -9. Apparently, the print came in at -12 cents. So just as a note, I'll be getting into the numbers here.
How is the stock doing? I'm completely blind. I'm like only looking at the presentation.
It's up. It's actually dropped. It's a less than 1% up after hours so far.
Okay.
Up
so Neutron added.
On the day.
So the next slide, Neutron added to the 5.6 billion NSSL program. Yeah, I mean, this we know about. New launch contract for the U.S. Air Force. That is new. So yes. The mission for USA Air Force Research Laboratory will execute a survivability experiment for the rocket-based point-to-point transportation system scheduled for a return to Earth launch on Neutron no earlier than 2026. So that's awesome. The new Neutron contract.
That's our full 2026 booked, I believe.
Yeah, it must be. I mean, the first, the undisclosed customer was 2 launches, right? But it didn't say that all of both launches was in 2026. So I guess it's 1 launch in 26 and 1 launch in 27.
Exactly. Yeah.
So yes, it'll basically be a reusable rocket Neutron for U.S. Air Force Laboratory for rocket cargo mission that supports point-to-point cargo. So they announced that they were trying to apply for this, but this is the actual contract award. This is something that's been floating for a couple of years. So this is good to see that we've been awarded that. I don't know of anybody else that has. The fact that it's established for 2026, well, I guess it says net 2026. So I guess it could be 27 or 28.
Yeah,
that's awesome.
So stage 2 is fully qualified. This we knew already, but stage 1 qualification underway. This is new, sort of. Full flight hardware with all mechanisms, avionics, flight control, and actuators that control the stage 1 upper motor currently undergoing final qualifications.
Oh,
yeah.
A couple slides down, dude. It's fucking wild. Not that wild, but pretty wild.
Okay, we go down. This one?
No,
Neutron launch site on schedule. Okay, next one. Archimedes engine testing at double capacity.
Double Archimedes, baby.
Whoa. Okay, if only we could speak to Sir Peter Beck. I would really like to ask him, because isn't it, if you, like, Matt, you're an engineer here, isn't it that if you have double capacity in the engine, like it's able to do that, then you're like over engineer the weight, and like then you can like engineer away things so that or you can, like, how do you call it, like pack the rocket more, like you can lift a lot more tonnage.
I think what they basically mean is that they're testing two engines at once, not necessarily that you have over engineered a single engine.
Say that again, that they are using.
So when you're talking about double capacity, you're thinking about one engine being able to produce twice as much capacity as initially designed.
Yeah.
Engineered it. I think what they're referring to here is the fact that there's two engines, two Archimedes, and so they're doing twice as much testing at once.
Okay. Thank you.
Yeah.
No, because I remember Sir Peter Beck said that, you have like this very slight margins, and I'm like, he was talking about like a 10% margin is big, and I'm like, how did they get the 200% increase suddenly? But that makes sense. Okay, cool. Matt to the rescue. Progress to the launch pad. Okay, so this is very interesting. So vehicle integration is pending. Stage 1 static fire is pending. Stage 2 static fire is pending. Wet dress rehearsal, launch. So yeah, engine qualification is currently happening. It would be so nice to understand, like, because I thought that doing the hot fire test, that's like qualifying the engine. But what's the difference between, if only we could speak to Sir Peter Beck. I'm making these jokes, guys, because sorry?
If only we could.
Exactly, if only we could, because it looks like we might have a new interview with Sir Peter Beck in the very near future. So yeah, that's going to be awesome. You can let us know what questions you want us to ask him. Mm-hmm. So stage 2 flight hardware is green. Stage 2 structures qualification is green. So it's the stage 1 flight. Yeah, I mean, we're getting closer and closer. Section 3, space system. Mineric, an important element. Working through the process.
No update on the timeline for that, I suppose.
No.
It's probably still going to be like a second half of the year item, I'd imagine, but maybe Q2. We'll see.
Yeah, I guess here they're showing where they can apply the Mineric.
Okay.
Yeah.
My revenue was wrong a little bit. Where's my spreadsheet?
Third Pioneer spacecraft for Varda launched and successfully orbiting on orbit. Re-entry maneuvers to position our W3 spacecraft to return a third Varda capsule to Earth underway shortly. A fourth Pioneer spacecraft in Varda contract undergoing integration and testing in Long Beach. So, Scott, can you explain how, if they don't even have a contract for the fourth Pioneer one, how it's undergoing testing and integration?
Okay, so this is like something I forgot to bring up on the weekly. It's so if you look at FCC, Rocket Lab, they recently uploaded a form. Of course, it's loading right now, but essentially Rocket Lab has uploaded a form that details this Winnebago 4 being the fourth Varda craft, and it has the date of the first half of 2026. But out of curiosity, I went over to Varda's FCC filings, and they also have a document that's also called Winnebago 4, but appears to be a different craft altogether. So it seems like Rocket Lab's calling their fourth built craft Winnebago 4, but Varda's calling their first craft also Winnebago 4. So I think Rocket Labs is launching in the first half of next year, and the other one, I think it was the second half of this year. The Varda's in-house one, which lines up with June. So yeah, I don't know. They're both calling the same thing despite being totally different craft. I think that's my takeaway anyway.
But that's funny.
Seems like it's launching though, so it's good news either way.
Yeah, exactly.
Even if it's late.
So product expansion, Starray, Frontier Radio, space software. I mean, we discussed this in the separate weeklies. Rocket Lab Corporation. So significant corporate development underway with multiple strategic opportunities under active consideration, including international expansion. Whoa. Alongside successfully entering new markets across launch and space systems, ongoing product development, and deepening national security work, it's time for a modernized corporate legal structure. New parent company Rocket Lab Corporation will replace Rocket Lab USA Inc. as the publicly traded company with the ticker Rocket Lab. So they're going to do a switcheroo on us. We're like own shares in the old company, and then there is going to be a new company. Let's hope we will be shareholders in that company as well. All shares of Rocket Lab USA Inc. will be exchanged on a 1-for-1 basis for Rocket Lab Corporation shares with no impact to shareholders' ownerships or rights. New company structure expected to be in effect from 1st of June 2025. Okay, interesting. Financial highlights and outlooks. Review of revenue and gross margins. So 122 million in revenue. That's really good. I think 32% increase. There's nothing wrong with that. Gross margin, the GAAP gross margin 28%, non-GAAP gross margin is 33.4%. That's very respectable. What do you guys think?
I like how we're able to shrink overall revenue and continue to increase GAAP gross margin. That's something that I'm excited about. Getting gross margin on a GAAP basis north of 30 is one of the things that I'm most looking forward to.
Yeah. It's a high gross.
What was the gross margin? That's the 32.1%? Or no, that's the revenue increase. Where are you seeing the gross margin?
Here. It's very small. I don't know if you.
Yeah,
should I make it bigger?
Okay, yeah. No, that's all good. It's actually better than I expected, even. So that's nice to see.
Yeah. Okay, so sequential revenue decrease of 7.4% quarter over quarter, or 9.8 million, driven by lower price Electron launches within the quarter, as well as a shift in program contribution within our satellite manufacturing business as MDA contribution rolls off and SDA contribution ramps.
Rolls off. Yeah, so we kind of brought this up on the weekly. That's an interesting touch point, and I don't know, maybe one day we can talk to Peter about it, but I'm curious what happens with these satellites throughout the year, if they're just sitting around like getting worked on, or if they are more or less done, just need some final touches. But the MDA contribution seems to be, I mean, actually, maybe we could even see if in the 10Q. I'll take a look in a minute, but it seems like that contribution is kind of not expired, but kind of rolled off, as they put it. So interesting to see what happens next.
Yeah, I mean, the SDA should take its place, but I guess that there's a bigger gap than they thought between the two programs. Review of backlogs. So the backlog was 1.067 billion. What was the ending backlog? Because they're not saying it, but I think that this is pretty much flat.
No, that's perfectly flat. Last quarter's backlog was 1.067 as well.
Yeah, but it's saying that there is more launch now and less space systems in the backlog. That's the change between these two, and there is more commercial and less government in this new backlog. We expect approximately 56% of our ending Q1 backlog to be recognized within 12 months, with the remaining 44%. So that's like a 560 million, maybe even 70 million trailing 12 months run rate. That's a nice increase. Healthy pipeline, including multi-launch deals and large satellite manufacturing contracts, can create lumpiness in backlog growth given the size and complexities of these opportunities. Okay, review of operating expenses. So operating expenses is slightly up. both GAAP and non-GAAP. And then the R and the increase due to increased software paired with a step up in Neutron development. Yeah, I mean, that's what we should be seeing. Non-GAAP free cash flow and adjusted. So Matt has made a video that was before earnings, and I think it was a great video. And he was saying that they might be operationally cash flow positive this quarter.
And it looks like I was wrong.
It does look like that, my friend. There's no, I was trying to come up with a nice way of how to say it, but you were.
Hey man, I'm wrong. You know, I think the thing that I was kind of scratching my head, right? That looks like a huge move in the opposite direction. But two things that I'm looking at now that I'm going through the cash flow statement here. Obviously, firstly, we were at 484 million in cash, and at the end of the year, we're at 517. There's a reason for that. I'll talk through that in a second. But associated with this particular slide, it looks like, from what I'm seeing, where do we? Where am I? That's the fourth quarter. Sorry, I lost myself. Here we go. Yeah, let me read it aloud. So, negative GAAP operating cash flow increased 51.8 million sequentially, primarily due to the lumpy receipts of the SDA satellite program, paired with continued Neutron investment and longer lead procurement for SDA and subsequent Neutron tails and related infrastructure to scale the business beyond our initial flight. So I guess the one thing that you guys need to consider is the fact that they had to basically outlay a lot of capital for the SDA contract and potentially Neutron, but they still somehow increased in cash. So one of the things that I'm sure we'll talk about on the call, and I don't know if there's anywhere else in the slide pack they stated, but if you look at the cash flow statement, if everybody remembers, they did I think an ability to sell up to $1 billion worth of capital or securities to be able to go to what they call the ATM. And it looks like within the quarter, they went and they got about $95 million worth of securities in the quarter. So if you look at or 92 million, I'm sorry. So they basically did some sort of equity offering for about 92 million, 93 million. Sorry, billion. No, million. Not 93 billion. 93 million. So I'm wondering if they'll discuss that a little bit on the call.
Yeah.
Sorry, I just wanted to talk through that really quick.
No, it was
because it caught my eye, the fact that we were increasing in cash, right?
I mean, it must be this share offering, no? That the shelf offering that they have the right to sell for up to 500 million shares at market value. No? Yeah, so that was the slide.
Yeah, so it looks like they offered 4.9 million shares. So the now share count is up to 511 million, which is about a dilution of about 1%. And for that, they got $90 million.
Good deal. I mean, I think you should raise money when you can, and I think the stock is at a higher range of valuation, so I think it's good to sell stocks now. So what are your key takeaways from this report?
I mean, I'm still kind of working through a few things here. I know it's like, put on your tinfoil hats or whatever, but okay, how does it go? On when Flatellite was first announced, it showed a neutron fairing, and within it there was 16. So it gives us an idea of how many Flatellites can go off with each neutron launch. And then it was like maybe a couple weeks, maybe a month later. What's his name? Stephen Ananias, I think is his name. One of the finance guys at Rocket Lab. He's on one of the conferences, and he mentioned that 20 could fit in a fairing. And now I'm noticing that there's actually 22 on one of the slides. Not that it is giving us any kind of detail that that's what's going to fit in a fairing, but it does kind of lead me to wonder if maybe that's more like a finalized number of what to expect for each. So Vince, do you mind scrolling up to the third page? It's like right near the beginning.
Can I just write 3? Oh yeah. This one. Yeah, 1, 2.
Yeah, so it kind of shows like that fairing, and it's kind of like, I think that's inferring that it's opening up, and there's 22 there. So maybe that's kind of an indicator of the final number for the fairing in terms of volume, I'd imagine.
And I see it all. So Scott, I'm playing off of what you're kind of putting down here. So slap my wrist if I'm reaching too much. That's on the future, right? If you go to the near, which is that middle piece in the orange, you can see neutron and flatellite both going up at the same time. And the picture shows the second stage carrying flatellites. Are you putting together what I'm trying to lead everybody to?
It feels like, like when there's an Apple event and then they release this like invitation to the event, and then you see this like Marcus Brownlee and these like tech reviewers like, what do these patterns mean? It must be that the iPhone is. We're like, this is a coded message to investors.
If only I had the ability to ask somebody who would know the answer to this, I would ask.
Yeah, if only you did.
I would ask if they will be testing with their first R&D neutron flight, if they'll be testing anything with respect to neutron. If only.
If only we could ask them. That is also a question that is on my mind. I mean, it's a zero risk thing, right? Because you're anyways wasting the rocket, and whatever you're sending like up with it, is getting wasted. So yeah, I really hope that they're going to send up some.
And as we just saw, they are at least purchasing equipment for SDA. And that's what that large influx of capital expenditure was in the first quarter. So we at least we know that they're in discussion with Myarnic, which for the flatellite, it shows in a couple slides the laser capability being incorporated into the flatellite. So, I mean, I feel like, I don't know. I don't want to get too tinfoily, call me tinfoil Tim. But
here's my tinfoil. So I think that the left side is the commercial launches for Neutron, and it shows that they're going to have like one commercial launch and then one flatellite launch, and then one commercial, one flatellite. So it's like 50% of the cadence is being used up, which kind of doesn't make sense because 2026 is already sold out, sort of. So maybe they're planning 3 launches in 2026. That would be. I'm
also noticing, Matt, I can't remember if it was if we were recording at the time, but I know we did mention, or that you did mention, the idea of breaking out. I think it was launch or maybe even more of the business, but breaking it down into more simplified parts. And I think it was Adam that responded. He was kind of like, we don't really do that, but they kind of have in the past. I noticed that it says spacecraft and components in the bottom. And I noticed that, I think for the first time, launch is broken down into small, medium, and then hypersonic. Typically, it's been kind of HASTE is, a subcategory of launch of small, I mean. So that's interesting to see as well.
Yeah, I'm curious. That was something I asked. I don't remember if it was after the second quarter or third quarter call. And at the moment, it didn't seem, they're probably so concerned with just getting Neutron to the pad. They're like, I appreciate Matt wanting to know. But at the moment, at that point, I don't think they'd even launched the second HASTE vehicle. And they obviously hadn't reached any sort of Neutron launch yet either. So, but yes, it would be nice to see it split this way, because I think, as you've alluded to, the reaction wheel business is actually pretty impressive. And so I'd like to see what that looks like. And, when it comes to actually contracting out the spacecraft business. But one thing that I don't see off of that question is the operations business, because they also have the SOC, the Satellite Operation Control Center in Colorado, which we know is in preparation or to be able to handle some of these long-term launches. So yeah, I'm kind of curious if that would also be a revenue stream that they should keep track of.
But was there any other takeaways from this earnings call that you guys are happy about or not, or are you more bullish or less bullish? I want to see also
the
for
thing
the
that
people
I'll
in the
just be
comment
blunt.
section.
So obviously from my ops cash positive perspective, I was wrong on that. So just want to get that out there. The backlog, I definitely thought was going to take a larger jump. I wasn't expecting 3 billion or anything like that, but to stay flat quarter over quarter on a sequential basis is kind of head scratchy, knowing that we've gotten a few good opportunities. Granted, like the NSSL contract, I don't know exactly what is incorporated with that. Now that they outlined it, it looks like you only really get $5 million in terms of like guaranteed sort of revenue from that, and the rest is kind of like hypothetical. So I'm kind of curious at when that happens. The fact that they didn't get any sort of revenue from that, from what I've at least seen, that UK contract that was that UK contract was in April. Okay, so that might not show up until 2Q. But anyway, I was just expecting a couple $100 million more of addition to the backlog, just based off of how many contract announcements we've had over the past few quarters.
I want to say something about the backlog. So I don't think it's as bad as people think. I see that a lot of people are disappointed like that, I guess, and the stock is down 4%, and I guess that is the biggest thing why the stock is down. But you have to keep in mind that one, when you are when your delivery is growing and your backlog doesn't go down, it means that your sales is increasing with your delivery, right? So that's because, let's say if your delivery is increasing 50%, but your sales is only increasing 30%, then your backlog is decreasing, right? So Rocket Lab has, been increasing a lot with the production. I mean, we have had 70% year all of last year, and this year it looks like the growth is going to be around 30%. And the backlog not growing, it still means that the sales is growing 30% more. And on top of it, I think that there is a lot of you could say different pieces of iron in the fire that can come out at any time. So I'm not that worried about the backlog. And yeah. And one other thing that is super bullish, I think, is that the gross margins are trending, both the GAAP and non-GAAP is trending up. And I don't know if you guys noticed, the guide for next quarter is highest ever gross margins, both GAAP and non-GAAP. And GAAP, they're guiding to be above 30% for, I think it's the first time that it will be that high.
Fair point. And that's probably something that we're going to talk about in the Q&A section, because I feel like they always hammer Adam being like, when are we going to start seeing these gross margins increasing? And Adam always replies with, it's been a while since I've seen a Solero contract or another space systems contract below 30%. So as we work through it, and it feels like over the past couple quarters, we've seen a couple percentage points increasing. So really they are, it feels like, working through that backlog and now starting to get to some of those better contracts. So it's awesome. I don't think people fully understand, like, it only will require a couple $100 million more of revenue. And I know that's a lot, that's asking a lot, but if we grow revenue by 30-40% and we have 30% gross margins, we're going to have the opportunity to get to our 1 or 2 pennies EPS not far from now. I honestly think that we're still on trajectory for the first or second quarter of 2026, and I'm sure they'll reiterate that in the Q&A today.
All right, Scotto.
Yeah, what upsets you, Scotty?
Well, so what I'm doing right now is I'm trying to kind of work through the launch backlog, namely, Vince, if you don't mind scrolling down one page to page 4. There's a mention of 5 launched within the quarter. That's a known quantity. And then there's 8 that are booked. And I'm just trying to make sense of what those might look like, because we have the the 4 IQPS launches that we already know, that's roughly 33.2 million, assuming it's the same value as the first 4. So that leaves the rest at 38.1 million. Now, if you divide that by 4, that's 9.5 million for the outstanding launches. Or for 5 launches, no, that wouldn't even make sense. So I guess we're looking at $9.5 million per launch signed in Q4 outside of the IQPS, but that seems way too high. Now, we do know the Kratos one, I mean, unless all 4 were, no, those couldn't be haste. Yeah, I'm just kind of scratching my head about what those 5 launches could look like, when exactly they were signed. It seems like quite a bit of backlog for that in the quarter, like a little bit more than expected. Now, I'm also be way too low then, right? I don't know. I'm just kind of playing with numbers, and something's not quite adding up yet in terms of what to expect for those new Electron launches. Hopefully, they say on the call who they even are.
Yeah.
Mhm.
We'll see.
I will
might even
say,
be
I
a
mean,
press release. I'll go take a look.
I obviously think that the thing that we're probably skipped over too quickly is the change from Rocket Lab USA to Rocket Lab Corporation to, I don't want to say decouple or disassociate with the United States, but really establish that global brand. And that's something that we've talked about now for a couple quarters. You know, we were fortunate enough to chat with Peter and Adam about what's the potential for haste and what's the potential for other opportunities to launch globally. And I know just from looking at previous history back in 2016, 2017, they were actually looking at a second launch pad potentially in Scotland, and unfortunately it didn't work out. But it just goes to show that there's no dependence, obviously, to launch from the United States per se, as long as it seems like that meets United States regulations and regulatory and everything the like. So I'm kind of curious. Obviously, we saw the contract with the UK. We've seen some rumblings of potentially launching from Australia. So, and I know there's a UK, US, Australia alliance called High Flight that was signed in November 2024. So there's some sort of hypersonic strategic alliance between the three countries. And so I'm kind of curious if that's the beginning. Obviously, the UK hypersonic being one that was signed in April. I'm curious if we're going to see one kind of more specifically for Australia. But is there more opportunity in Europe? Is there more opportunity in, let's just say, Japan for hypersonic testing and making sure that from a defensive side, our allies, or at least our international interests from a defense perspective, are met?
So, question, guys. So it said that they have multiple significant international opportunities under consideration. So, what do you guys think the next acquisition is going to be? Because it doesn't feel like they're done acquiring companies yet.
It's a good question. Like what else do they even need? I don't know. After Minarek, I'm kind of
I mean,
I'm sure
you
there's
were
something
spot
obvious,
on, or like the retail community was spot on Mineric, but because it's funny that they said that it's international, right? Like it's not in the US, and I'm like, okay, what exactly are they looking at? I'm sure they're not.
Space Ghost mentioned Spectrum, which is that's a fair point. There's also, I wish I could remember who sent it to me. And I'll probably explain this poorly, but I think it's a really interesting idea at least. But they mentioned to me, like, what if the application is related to banking? And at first I'm like, well, what's the point? Like, but
Banking?
yeah, like, well, they explained it very well. It's I should probably I'll try to find their name in a second here, but it's the way that they explained it is like when you think of like traders that do high volume, it needs to be like instantaneous. And the best way to do that is like having zero lag time. So you'll hear of like financial institutions, they'll have like literal like internet wired, like specialized internet wired. I'm sure there's a proper term for it, just to get that like millisecond like that millisecond shaved off of their transaction times. And if you want to just cut out all the noise and have no other kind of dependencies, you're going to shoot that request to space and shoot it right back down. You're going to get that trade done faster than you could on Earth. And I thought that was at least an interesting, like, okay, maybe, yeah, like if you're transfer, if it depends on hundreds of millions of dollars, those like, shaving fractions of a second off of each trade, then yeah, there's a lot of money there for sure. So
Interesting.
mhm. Yeah, trading arbitrage, as Curtis puts it. Yep. Yeah.
Yeah. Okay, so the stock is down 6%. Is it a buy the dip, or is it like the thesis has changed and Peter Beck is a dishwasher engineer and we should have never trusted him with our money in the first place?
I was standard buy every 15th and last day of the month.
We all need to be more like Matt. That's the best answer.
Yeah. Yeah, I'm not worried. And
Yeah.
plus, like, we're gonna see a bunch of movement during the call anyways. Like,
Yeah. And look, I get it that this quarter, I don't think it's an exciting quarter, but it doesn't mean that it's a bad quarter. Because like we're getting closer and closer to Neutron launch, and obviously every quarter where Neutron doesn't launch, it's like okay, fine. But I mean, if you look at it, we have close to record gross margins. We're growing 30%. The cash is growing. There's contracts coming in. Neutron is getting closer. I mean, what more could you want? And the fact that the market is acting psychotic and gets overexcited and then doesn't get excited, I think this is a good buy the dip opportunity here. I actually want to see in the comments. So what do you guys think, and how are you going to react if the stock stays at this level? Are you going to add? Are you going to ask for daddy to cuddle you while you cry on the sofa, or what are you going to do?
Good question. I'm just going to continue to add personally. I don't have a lot of additional capital I want to add to the markets right now. I do have an influx of capital in the coming months, but
you keep
really
buying houses.
Yeah, that's the problem. I keep running out of cash. So yeah, I mean, in that respect, I hope to continue. If I have any extras at the end of the month, I'll check my bank accounts, and if I have any extra cash, maybe I'll throw it in. So yeah, I don't necessarily know. But I'm not too disappointed by anyone. I knew, kind of going back to what you said, I wasn't expecting a barn burner of a quarter. I wasn't expecting like an S-curve sort of growth trajectory. I was expecting, the 30 or so percent year-over-year growth, which is still good in my opinion. And even for this to be a kind of flat to slightly down quarter-over-quarter sequentially sort of quarter, and it's just like another thing that you have to put in the books. I think you said it perfectly. There's a lot of pokers in the fire. And with that, I think it's just a wait and see sort of quarter. And you can't have quarter after quarter after quarter of new things to come out with, right? I mean, all these things take 5 to 10 years really from concept to like in somebody's brain to actually getting it up into space and getting it on into reality. So that takes time, effort, capital. And so to me, I don't think it's a bad quarter. I think, am I a little bit, I think the thing that I'm slightly upset about, not upset about the not being right about the ops cash positive. That doesn't bother me, because to me, getting SDA out and working on the flatellite and getting that working is great. But what else was I going to say? The ATM thing, I want to hear a little bit more context on. Selling the 4.8 million shares. So Scott, we have 2 minutes. I want to hear your thoughts.
I'm looking. I was hoping that we'd see anything given about the reaction wheels. So the last time that we checked in with the 10K, it would have been, there was just an anonymous government customer that was listed, and I was kind of under the impression that might have been our sub out for Amazon. but I'm seeing the government customer being listed again in this quarter as 28% of revenue, or 34.3 million. And I think it was Jacob pointed out that the government customer that was listed through full year of 2024 being 11% of revenue, that might have just been SDA. And so it looks like maybe that's another $34.3 million for that as well. And outside of that, we only have Knies being a more than 10% customer, just being that 10%, which is no surprise. That was the couple launches that went off within the quarter. But yeah. Really, I'm really hoping that they give us a little bit of insight about those new launches, those electrons. But
music started, by the way, Vince. I don't know.
Yeah, I just want to do a technical check. Do you guys hear the music? Do you guys hear any music?
I do not.
No,
nothing yet.
Okay, then I have to do my. It's good we tested before the.
Mhm.
Do you hear music now?
Yes.
Yes.
Yeah.
Good. Okay, I mean, it's not too loud. We can have it on, no? Or
Yeah, it's perfect.
Good.
Yeah, I don't know. It'll be interesting to see. There's some questions I have, and it'll be nice to be able to follow up and get some answers. And as always, this is one of the longest of the earnings calls that I deal with on a quarterly basis, and I always learn a lot coming out of it. And anytime I've been kind of confused, Peter and Adam seem to have the right responses, or at least coaching, to get me through it, because by no means I'm an enthusiast, I'm not an expert. And so these guys are they know way more about space than probably 99.9%, maybe than Elon, and maybe some of our other friends at NASA. So in that respect, these guys always coach me through it.
Thank you for standing by.
Oh,
Hi, my name is Jessica, and I will be your conference operator today. At this time, I would like to welcome everyone to Rocket Lab first quarter 2025 financial results update and conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, simply press star 1 again. Thank you. At this time, I would like to turn the call over to Muriel Baker, Senior Communications Manager. Muriel, you may begin.
she's the one, guys.
Thank you. Hello and welcome to today's conference call to discuss Rocket Lab's first quarter 2025 financial results. Before we begin the call, I'd like to remind you that our remarks may contain forward-looking statements that relate to the future performance of the company, and these statements are intended to qualify for the safe harbor protection from liability established by the Private Securities Litigation Reform Act. Any such statements are not guarantees of future performance, and factors that could influence our results are highlighted in today's press release, and others are contained in our filings with the Securities and Exchange Commission. Such statements are based upon information available to the company as of the date hereof and are subject to change for future developments. Except as required by law, the company does not undertake any obligation to update these statements. Our remarks and press release today also contain non-GAAP financial measures within the meaning of Regulation G enacted by the SEC. Included in such release and our supplemental materials are reconciliations of these historical non-GAAP financial measures to the comparable financial measures calculated in accordance with GAAP. This call is also being webcast with a supporting presentation, and a replay and copy of the presentation will be available on our website. Our speakers today are Rocket Lab founder and Chief Executive Officer Sir Peter Beck, as well as Chief Financial Officer Adam Spice. They will be discussing key business highlights, including updates on our launch space systems programs, and we will discuss financial highlights and outlook before we finish by taking questions. So with that, let me turn the call over to Sir Peter.
Thanks, Muriel, and thanks everybody for joining us today. Well, we had a very strong start for 2025 across the business. I want to provide a bit of an update as we build towards our future as a constellation owner and operator. As we take you through our achievements for the quarter, keep this in mind, how every milestone and every mission brings us closer to that more lucrative piece of the space value chain. We continue to launch and book more and more Electron missions, proving we hold the keys to space with regular launch access. As Neutron races closer to the pad, we also get closer to having a 13-ton reusable launch vehicle that can deploy our own satellites with speed and cost efficiency, while also generating revenue through the missions we'll fly for our national security and commercial customers. Having gone after the full space ecosystem with satellites, launch vehicles, and everything in between, our deep vertical integration is one of our distinct competitive advantages. And while it's bringing us closer to our strategic end goal, this quarter it's also served us well against a backdrop of dynamic international trade environments, ensuring that we have the supply chain lock with secure and predominantly US-based manufacturing. So with that, let me move on to some more specifics for the quarter. We've posted a near record quarterly revenue of $122.6 million, nudging to the top end of our prior guidance and up 32% compared to last year. We have another strong looking quarter on the horizon, with the midpoint of our guidance range for Q2 pointed to another record setting quarter for the business. And I'll let Adam go into those details a little bit later. On the launch side, demand is soaring. We booked 8 new Electron and HASTE missions for Q1, and at the same time launched 5 missions with 100% mission success. 3 of those took flight within just 13 days of each other, and there is demand from our customers for more than 20 launches this year. For Neutron, our selection to the DoD's high-value launch contract NSSL program is really the headline for the quarter. I'll go into more detail about what this means and how we plan to deliver against it in the later slides. And in Space Systems, it only took 15 days to bring back the second in-space manufacturing mission for VADA before our third spacecraft was launched to space and began its operation. A real demonstration of the speed and capability we've developed to deliver consistently reliable spacecraft for our customers. So there's lots to get excited about this past quarter, so without further ado, let's dig in. First up, turning to small launch. So Electron continues to prove why it's the global leader with 5 missions in the quarter, all across only 6.5 weeks, proving that even when our customers are ready to go with their payloads, so are we. Looking ahead, next weekend's mission for the multi-launch customer IQPS will be the first of 6 in a row that are flying back-to-back out of Launch Complex 1. Electron makes frequent and reliable launch look easy, but if we take a look back over a past decade, it really shows that Electron has really cemented itself as the preeminent small launch provider. Electron really has scaled to provide the majority of American commercial small launch. A focus on execution, smart use of capital to scale launch cadence and production, and a solid and reliable product is what it takes to succeed. A few others have been able to achieve that in the same way we have with Electron. That really goes to show what an impact Electron has had and continues to have on the industry in delivering trusted and reliable access to space for small satellite operators. And Neutron is set to do exactly the same, obviously. Moving on to HASTE, and our hypersonic test vehicle continues to be a sought-after capability both domestically and internationally. Both the US and the United Kingdom have picked HASTE to develop sovereign hypersonic technology for their multi-billion-dollar defense programs. We've been selected to participate within the US Air Force's EWAAC program, a $46 billion indefinite delivery, indefinite quantity program. The second program we've been on-ramped to is a $1.3 billion framework by the United Kingdom's Ministry of Defence as it works to shore up its hypersonic capabilities. This is HASTE's first international call-up and a proud moment for the team to be able to contribute to the collective security of the United States and its allies. We've also landed another HASTE launch contract through Kratos for the Department of Defense MARC-TB program. So that's 7 missions now with HASTE for MARC-TB, making us one of the most prolific commercial launch providers on that flagship DoD program. Regular hypersonic flight tests are critical to developing the technology and infrastructure needed to keep countries safe, and HASTE is right at the center of that effort. Now on to Neutron. Momentum is building for Neutron on the back of really significant progress we made in 2024. The big news item in this quarter has been our on-ramp to the Pentagon's high-value launch contract National Security Space Launch Program. This is the most competitive launch program in the industry to fly the DoD's highest priority and most critical missions. Our selection to it is a huge vote of confidence by the Pentagon in Neutron and affirms us as one of the most capable American launch providers. We're also the only publicly traded company to ever onboard to NSSL. Once we're clear of Neutron's first launch, we'll be bidding for task orders under the Phase 3 Lane 1 program, which has a total value of $5.6 billion, and an ordering period through to June 2029. We've already completed a kickoff meeting with the full contingent of future mission partners, including the US Space Force Assured Access to Space, NRO Office of Space Launch, and other stakeholders from across the government. This was part of a $5 million task order for a mission assurance showcase that came with Neutron's selection. Our entry into NSSL is the type of disruptive competition the US government and the industry has been asking for. Missions for defense and intelligence satellites used to be dominated by legacy launch providers, and the DoD has been upfront about wanting new partners with innovative approaches that bring increased competition. That's exactly what we set out to achieve with Neutron, and I'm excited to deliver it once we start flying later this year. I'm also pleased to announce our latest contract for Neutron. We've been selected to fly a US Air Force Research Lab mission that supports point-to-point cargo transportation in a multi-manifest mission. It's all part of a program by the AFRL to create rapid delivery systems for defense cargo using commercial launch vehicles and a multi-year effort. Since the mission is all about bringing things back to Earth, AFRL will fly on a return to Earth Neutron no earlier than 2026. We know re-entry and rocket usability is a critical advancement in space tech that the DoD is highly supportive of, which is why Neutron has been designed from the get-go for reuse and frequency. And the latest contract is a show of confidence from the DoD in our ability to deliver that. Moving on to some technical updates. It's a big green tick for Neutron's second stage qualification campaign, proving out the stage's design, operations, and readiness for launch later this year. We ran launch-like operations across its full combination of flight software, hardware, avionics, guidance navigation control systems, and we also proof tested it to more than 125% of its design point. Some of that including applying more than 1.3 million pounds of force and tension across the carbon composite structure. Now, the second stage is one of the more novel pieces of Neutron, so it was important that we retired that risk first. The added benefit of that, of course, is that the structure of stage 2 is largely similar to stage 1. So by completing this qualification campaign first, we brought down a lot of the same risks that we may have seen in stage 1. Having passed with flying colours, Neutron stage 2 is now going through final assembly and will be shipped to the launch site in the next few months in preparation for stage testing with the engine. Now, Neutron's pointy end, the stage 1 upper module, is also close to completion as well. This is obviously more than what you saw last quarter with just the Hungry Hippo fairings. This is the full module, and it includes all the major stage 1 elements like canards, interstage, along with all of its mechanical systems like actuators, locks, avionics systems, and running all the flight software. The full assembly represents some of the most complex mechanical systems that exist on the vehicle, and they all perform seamlessly during testing. We're just a few small finishing touches away from another big tick on the road to launch for Neutron for that whole section. All of the rocket puzzle pieces are really starting to come together now. And look, if we can ship them around the country, we can also fly them. And I think everybody knows how much I like helicopters. But even at their size, Neutron's carbon composite material makes them light enough to move large pieces around by helicopter, which is what we did earlier this quarter to help bring Neutron Stage 1 hardware together and place it all at our facility in Baltimore. While the majority of the rocket is assembled here, given the size of the rocket and the road it has to travel on to Launch Complex 3, Neutron is shipped in stages before it's fully integrated as an entire rocket. Over at Launch Complex 3 in Virginia, we're on schedule and close to finishing Neutron's launch pad. With everything in its place, the team is working around the clock to complete all the integration and activate the pad. One of those more recent campaigns was the water deluge test. Turns out there is water on Wallops Island because we pumped thousands of gallons of it through our pipes. The flow rate was the equivalent to an Olympic-sized swimming pool every 40 seconds. And event planning is underway for the ribbon cutting there soon as well. So because Launch Complex 3 really is an important new addition, not just for the state, but for the whole nation, with Neutron's on-ramp to NSSL, our rocket will be the first to fly for the program out of Virginia. And that really highlights the importance of the pad as a critical national security asset. At the engine test site in Mississippi, the propulsion team is doubling down on Archimedes. We're hot firing flat out, as you would expect, with flight avionics and full software stacks. And the team is busy tuning the engine through a barrage of tests. We've also just completed the build of a second engine test cell that's now up and running to enable testing 2 engines at the same time. So as you can see, we're steadily making our way along the path to the pad. We've ticked off some big wins recently, and every element of the vehicle has been worked simultaneously. Yes, it's an aggressive schedule that we have ahead of us, but that's how we've delivered new rockets to the pad before. And a reminder that the schedule that you see here is not sequential. Actually, everything is happening at once and in parallel. A good example of this is the launch license to fly. There's a strong possibility that the paperwork will only come in days before launch, just like it did for our first Electron flight from Virginia. But that doesn't mean we stop everything else from taking place that needs to be done before we get that. So, and with no major issues, we're really still targeting the first launch by the second half of this year. Now let's turn to updates across space systems. Just before the quarter closed, we announced our intent to acquire Mynaric, a German company specializing in laser-based satellite communications. This intended acquisition still has to make its way through all the approvals, but otherwise is progressing well. And so I want to take this opportunity to get into the details behind why we decided to pursue this acquisition and its strategic importance to the growth of our business. A key piece of any large constellation is the ability to communicate between spacecraft with high speed and secure connections. Often that's laser-based, and the technology that Mynaric has developed is some of the best in the world. Beyond the technology, this deal also sees us set down our first European footprint in Munich. With extensive production assets, intellectual property, product inventory, and a committed backlog for future constellations, there's a clear line of sight to European growth opportunities in this deal. And we'll be looking to expand the existing team of talented engineers and staff to meet international demand. Now, by bringing them in-house, the terminals in-house, we will add a new element to our spacecraft supply chain that improves our product line and strengthens our position in commercial, national security, and defense contracts. Mynaric terminals are already being supplied for our $500 million contract with the Space Development Agency, along with many other companies, making this even more of a logical integration. We've proven across all of our acquisitions to date that we can take a highly sought-after product, scale it, and make it available in high volume. It's our full intention to do the same here again by expanding into Europe and to bring Mynaric's terminals to the world, and potentially for our own constellation too. So I'm excited about the potential of this deal, and we'll be sure to keep you updated on its progress. Turning to our Varda missions, and very soon we'll be bringing the third in-space manufacturing capsule back to Earth with our Pioneer spacecraft. This mission launched in Q1, just 2 weeks after the return of the second capsule. And since then, our spacecraft has been providing power, communications, propulsion, attitude control, and to keep Varda's capsule in orbit. The process has now begun to position Pioneer and Varda for Earth re-entry over Australia. So keep an eye out for updates on the mission in the coming weeks. Meanwhile, the team is working hard at wrapping up the integration and testing for our fourth and final Pioneer spacecraft in the Varda contract in Long Beach. Our suite of space systems, components, and mission software is constantly under development, allowing us to consistently produce.
We lost Sir Peter Beck. Do you guys hear anything? No. Can you speak so that we see that it's not our issue? It's
My bad. I was muted there. Yeah, I think the same thing happened last time too. He cut out right around the same point. Chat's saying the same thing. Yeah.
happens every call.
All right, just wanting to remind folks, if you would like to ask a question, you can do so by pressing *1 on your telephone keypad.
Well, I guess it was done then.
I guess so.
Are we ready to take questions now?
What about Adam's part?
No, this is Adam. I think we've had a comms issue with Pete on his
Okay, sorry.
system. let's give him a minute to
No problem. While we're getting Pete back on the line again, if you would like to ask a question, go ahead and hit *1. We'll get those queued up while we get Pete reconnected. Thank you.
Interesting.
Curtis, don't say anything bad about Muriel. You don't know the favors she's doing for us.
So just a little update while we wait. It seems like those 4 Electron launches were all signed within Q1. And that would give us an average selling price of 9.5-ish for the ones outstanding, leading to me to believe that these might all 4 be haste bookings. That's cool to see.
That is amazing.
It is. Yeah, and while they're bringing that up, I was doing see if I can.
Until we can get Pete back on the line, I'll just pick up where he left off.
Okay, that would be great. Thank you so much.
Great. Thanks, everybody. Yeah, this is Adam Spice, CFO at Rocket Lab. So I'll pick up where Pete was discussing our product expansion. And our suite of space systems components and mission software is constantly under development, allowing us to consistently produce and release new products that really move the needle for the industry and for us. I'll quickly take you through a couple of our latest releases. With StarRay, we've introduced a line of modular solar arrays for satellites that are customizable to meet all their power needs. With multiple different panel dimensions that small satellite operators can choose from, it's a plug-and-play solution at a low cost that helps to speed up small satellite development for our customers. And we've got contracts already to supply these customizable wings to constellations under development right now. We've also expanded our suite of frontier satellite radios that are compatible with the industry's most important global ground stations. And on the software side, we've introduced the next-gen versions of our highly popular Max software packages for satellite guidance and control. The software behind Intermission for ground data and space operations and Max Constellation for software control of satellite constellations is the same that helped land a commercial lunar lander on the moon earlier this year, supported NASA's Capstone mission, DARPA's Blackjack program, and which commands our Pioneer spacecraft for our Varda missions. Next, we've also had an extremely active quarter pursuing new opportunities for space systems that further scales our vertical integration. We're pursuing several large government and commercial contracts that would see us building entire constellations of satellites, not just individual spacecraft. These are industry scaling and shaping constellation builds that would tap our full space systems value chain and realize significant value that reshapes our business. And on the M&A side, we have a half dozen deals in the pipeline as we continue to expand our vertical integration. There's high potential in all of this, and we've expanded a lot as a company. With our eyes set on Europe and international expansion, as well as the deepening national security work that we're taking on through space systems and launch, the time is right for a new company structure that makes it simpler and more efficient to manage the business and our growth, particularly when it comes to U.S. government classified programs. Our new parent company, Rocket Lab Corporation, will replace Rocket Lab USA Inc. as the public company listed on the NASDAQ. Existing shares of Rocket Lab will automatically convert on a one-for-one basis into shares of common stock of Rocket Lab Corporation, which will keep the RKLB ticker symbol. Trading is expected to continue uninterrupted on the NASDAQ, and there will be no impact to shareholders, ownership, or rights. We should have the new company structure wrapped up by the end of the month. And with that, I'll transition over to the review of the financial highlights for the quarter. The first quarter 2025 revenue was $122.6 million, which was at the high end of our prior guidance range and reflects significant year-over-year growth of 32.1%, driven by strong contribution from both business segments, but led by Space Systems. First quarter revenue declined 7.4% sequentially, primarily due to the mix of lower-priced Electron missions in the quarter, paired with an aggregate reduction in our components businesses, with both of these headwinds expected to reverse and convert into tailwinds in Q2. Our Launch Services segment delivered revenue of $35.6 million, reflecting a slight step down in average selling price. However, our current backlog for Electron and HASTE backlog continues to support an increasing ASP, with some variability quarterly tied to volume purchase commitments, launch location, and mission assurance requirements. Although variable quarter to quarter, we expect ASP for the calendar year 2025 to materially expand when compared to 2024, and with that, continued gross margin expansion. Our Space Systems segment delivered $87 million in the quarter, reflecting a sequential decline of 3.4%, driven by our attitude determination and control systems and separation systems businesses. Now turning to gross margin. GAAP gross margin for the first quarter was 28.8%, above our prior guidance range of 25 to 27%. Non-GAAP gross margin for the first quarter was 33.4%, which was also above our prior guidance range of 30 to 32%. GAAP gross margin improved sequentially owing to an improved mix in satellite manufacturing, partially offset by a decline in launch margin segment related primarily to lower average selling price. Non-GAAP gross margin was down slightly sequentially due to a lower stock-based compensation adjustment under our EAC program accounting. Relatedly, we ended Q1 with production-related headcount 1,088, up 84 from the prior quarter. Turning to backlog, we ended Q1 2025 with $1.067 billion of total backlog, with launch backlog of $422.2 million and Space Systems backlog of $644.8 million. While overall backlog growth has been modest, launch backlog nearly doubled year-over-year, with strong underlying trends as we convert a very strong pipeline of Neutron, Electron, and HASTE opportunities. Space Systems bookings remain lumpy given the timing of increasingly larger needle-moving customer and program opportunities, but remain at a healthy level despite a step up in revenue run rate over the last few quarters. We continue to cultivate a healthy pipeline, including multi-launch deals and large satellite manufacturing contracts that, as mentioned earlier, can create lumpiness in backlog growth given the size and complexity of the opportunities. Relatedly, in Pete's earlier comments, he referenced being on-ramped recently to some very large and strategic procurement programs, including the very large and exciting NSSL program, in addition to a few multi-billion-dollar hypersonics programs domestically and abroad, which now set the stage for exciting backlog expanding task order bidding. Getting on-ramped was the required milestone to unlock this potential, so we're very excited about what's to come. We expect approximately 56% of current backlog to be recognized as revenues within 12 months, and we continue to get relatively quick turns business that drive top-line growth beyond current 12-month backlog conversion. Turning to operating expenses. GAAP operating expenses for the first quarter of 2025 were $94.4 million, within our guidance range of $93 to $95 million. Non-GAAP operating expenses for the first quarter were $76.8 million, up $2.3 million sequentially, which was just below our guidance range of $77 to $79 million. The sequential increases in both GAAP and non-GAAP operating expenses were primarily driven by continued growth in prototype and headcount-related spending to support our Neutron development program. Specifically, investment has increased to support Neutron propulsion as we continue to qualify Archimedes, and mechanical and composite structures supporting the fairing and tank fabrication ahead of the first flight this year. In R&D specifically, GAAP expenses increased $6.9 million quarter on quarter due to the ramping up of the Archimedes production, paired with increased expenses related to mechanical systems and composites, as just mentioned. Non-GAAP R&D expenses were up $4 million quarter on quarter, driven similarly to the GAAP expenses. Q1 ending R&D headcount was 923, representing an increase of 95 from the prior quarter. In SG&A, GAAP expenses decreased $800,000 quarter on quarter due to a decrease in outside services. Within that GAAP spend, we reported non-recurring transaction costs of $1.4 million in Q1 due to continued corporate development activities, including advancing a robust pipeline of M&A opportunities. Non-GAAP SG&A expenses decreased modestly by $1.7 million due primarily to a decrease in software licenses. Q1 ending SG&A headcount was 332, representing an increase of 3 from the prior quarter. In summary, total first quarter headcount was 2,343, up 182 heads from the prior quarter. Turning to cash. Purchases of property, equipment, and capitalized software licenses were $28.7 million in the first quarter of 2025, an increase of $7.2 million from the $21.5 million in the fourth quarter of 2024, as we accelerated our LC3 construction activities and expanded our additive manufacturing capacity to support Archimedes scaling. As we continue to invest in Neutron R&D, testing, and scaling production, we expect increased capital expenditures to continue leading up to Neutron's first flight. GAAP operating cash flow was a negative $54.2 million in the first quarter of 2025, compared to a negative $2.4 million in the fourth quarter of 2024. The sequential growth in negative GAAP operating cash flow of $51.8 million was driven primarily by materially lumpy cash receipts from our large satellite programs, paired with continued Neutron investment and long lead procurement supporting SDA, as well as subsequent Neutron vehicle bill of materials and related infrastructure, including the recovery landing barge to scale Neutron's cadence beyond its initial test flight. Overall, non-GAAP free cash flow, defined as GAAP operating cash flow less purchases of property equipment software in the first quarter of 2025, was a use of $82.9 million compared to a use of $23.9 million in the fourth quarter of 2024, again driven by lumpy cash receipts and disbursements. The ending balance of cash, cash equivalents, restricted cash, and marketable securities was $517 million at the end of the first quarter of 2025. The sequential increase in liquidity is due to the at-the-market equity offering that we announced earlier in the quarter, which generated $92.8 million in gross proceeds through quarter end, which is intended to fund growth, including future acquisitions, such as the Monarch acquisition, along with general corporate purposes. As such, we exited Q1 in a strong position to execute on our organic expansion initiatives, as well as inorganic options to further vertically integrate our supply chain with strategic capabilities and expand our addressable market, consistent with what we have done successfully in the past. Adjusted EBITDA loss was $30 million in the first quarter of 2025, better than our guidance range of $33 to $35 million loss. Sequential increase of $6.8 million of adjusted EBITDA loss was driven by a slight decline in revenue growth paired with an increase in Neutron R&D during the quarter. And with that, let's turn to our guidance for the second quarter of 2025. We expect revenue in the second quarter to range between $130 and $140 million, representing slightly greater than 10% quarter-over-quarter revenue growth at the midpoint. We expect meaningful expansion in both GAAP and non-GAAP gross margins in the second quarter, with GAAP gross margins to range between 30% to 32%, and non-GAAP gross margins to range between 34% to 36%. These forecasted GAAP and non-GAAP gross margins reflect improvement in launch ASP and overhead absorption. We expect second quarter GAAP operating expenses to range between $96 and $98 million, and non-GAAP operating expenses to range between $82 and $84 million. The quarter-on-quarter increase is to be driven primarily by continued Neutron investment across staff costs, prototyping, and materials. We expect second quarter GAAP and non-GAAP net interest expense to be $3.1 million. We expect second quarter adjusted EBITDA loss to range between $28 million and $30 million, and basic weighted average common shares outstanding to be approximately 514 million shares, which includes convertible preferred shares of approximately 51 million. Lastly, consistent with last quarter, we believe negative non-GAAP free cash flow in the second quarter remain at an elevated level in the range of $40 million to $80 million, excluding any potential offsetting effects of financing under our existing equipment lending facility. And with that, we'll hand the call over to the operator for questions.
Great. Thank you so much. Again, if you'd like to ask a question, please press *1 on your telephone keypad to enter your question into the queue. And our first question comes from the line of Edison Yu with Deutsche Bank. Edison, your line is open.
Hey, good afternoon, team. Thank you for taking our questions. First one, want to ask about Mynaric. It's a public company, so we've obviously seen some of the struggles that they've had. After you're doing your analysis or due diligence on it, what do you think is the kind of the biggest issue they've had and the plan to kind of address that so you can scale it up?
I can take that one if you want, Adam. And
Yep.
at this point, I think it's appropriate to make the statement that we can go to the moon but can't secure a telephone line. So my apologies for that. But the biggest issue there is just production, and that's an area that obviously we're very, very strong in. So, as we look at them as a company, they've got a great product. There's been a tremendous amount of capital invested in the business to scale, but there's just a few fundamentals there that we really feel we can jump in and fix.
And would you expect that ultimately to be a quite a high margin product, or at least similar to some of the merchant business that you do now?
Yeah, Adam,
Yeah,
I
I
would say
mean,
that. Go ahead, Pete.
Oh, you go, Adam. You're better to answer that.
Yeah, no, I think when we look at how it folds into our overall portfolio of subsystems, we think it's going to be very consistent. Probably, again, I would say that, scale is important to that business too, the number of terminals that get made. So as we ramp up into these programs, the ability to absorb the overhead, will improve. So I think, probably starts kind of, I would say, more towards the average of our program, and probably, gets to be hopefully one of our better margin programs, product lines in the portfolio. But I don't see it being vastly different, in totality. It's going to be pretty consistent with our overall kind of blended margin for our components business.
Gotcha. And then kind of in relation to that, you mentioned in the slide deck, in the remarks, that you still have several, I think half a dozen potentially quite large opportunities in the pipeline. I'm wondering if you could maybe comment, are you considering looking at actual operator assets? So not just kind of tuck in for components, but other operators out there, given there are some, I would say, fairly distressed assets, and would you kind of consider working with them or acquiring them in some way?
Yeah, listen, I mean, we look at everything, right? And some things like Monarch are nice little tuck-ins to kind of bolster our end vision, and then we'll look across a range of things, including much more needle moving opportunities. And I would say that to your point, the opportunities right now to do interesting things are quite high. There's quite a lot of opportunity out there. Hence the reason why we've made sure we're in a strong position to act on some of those opportunities.
Understood. And just quick housekeeping: the space systems margin was quite good in the first quarter. Is that a good run rate for going forward?
Sorry, you broke up a little bit there, Esan. It was Esan. It was quite what? Sorry.
It was quite high. It was quite good. It was very strong performance in space systems margin in the quarter, gross margin. Is that a good run rate?
I think it is, right? I think we're kind of now getting to the point in scale in the business where we're starting to deliver those better gross margins. So we do expect to continually expand our gross margins for the business in its entirety as we progress through 2025. Probably actually be more pronounced on the launch side than it will be on the space system side. I'd say almost certainly be more pronounced on the launch side, because we just know that given the healthier mix on the ASP side, along with an increase in cadence in the back half of the year, sets that part of our business up quite well for significant margin expansion. And we think it'll pretty much, we're on track to kind of get to where we've been talking about where we wanted to be for the last few years as we exit 2025. So good news on the margin front for sure across both space systems and launch.
Fantastic. Thank you.
Your next question comes from the line of Gautam Khanna with TD Securities. Gautam, your line is now open.
Yes, thanks. Good afternoon, guys. I was wondering, could you just elaborate on the launch margins in the quarter? What may have drove that variability down a little bit? And if you could give us an update on your free cash expectations, the cadence through the year, that'd be very helpful. Thank you.
So the launch margins are we've said consistently that our experience in ramping this launch business is there's a lot of fixed overhead and fixed expenses that go along with running this business. You have things like, the standing cost of a launch range in New Zealand, which is incredibly strategic, but when it's underutilized, it burdens the business with a lot of fixed costs that have to be absorbed. So cadence really is everything. And even though, the cadence is relatively consistent, for example, Q1 versus where we see the business in Q2, and we do see an uptick in cadence in the back half of the year, it's really a combination of cadence, which is the number one driving factor. And I'd say second, factor would be the ASP. And ASP can skew quite a bit. I mean, we've got volume launch deals that, we price relatively aggressively because people are making long-term volume commitments to the business. And there's actually some synergies and efficiencies when you're doing kind of a rinse and repeat for launches, because a lot of the GNC work is kind of done, and we can reuse things like adapter plates and so forth for the payloads. So you get efficiency through scale and through cadence, but also the ASPs can be quite different. Some of these missions that require more mission assurance and data delivery and so forth after the launch garner a higher ASP. So really, we're looking in the back half of the year to be a combination of both of those positive factors: more cadence, so more overhead absorption, and a significantly better ASP as a result of some of the higher mission deliverables that we have to perform. So it's all goodness on that front. And when it comes to kind of the cash flow dynamics as we progress through the year, again, it's all about getting the first launch of Neutron off. That's why that's such an important thing. It's got all hands to the pump internally to make sure that we hit our objective of getting that off in the second half. And then, it's also paired with a lot of the cash flow dynamics are tied to getting that first launch off, but there's also some things that we're doing in parallel to getting the first launch off, which is kind of priming the business to be able to scale kind of efficiently and rapidly after that first launch, including things like investing in this return on investment barge. And then also kind of purchasing long lead inventory items for the subsequent Neutron vehicles. So, some of those things you have to buy components, 12 months or greater in advance. So we're leaning forward. We're purchasing those long lead items so that we'll be ready to kind of scale production quickly. So I'd say that you should expect these elevated levels of kind of negative free cash flow that we posted in Q1 to kind of continue in Q2 and certainly in the second half of the year until we get that first launch off, and then we expect things to moderate. And we can provide more color on that as we get closer to that milestone.
I appreciate it. And one last one on tariffs. Can you size your exposure, where you have the exposure, if at all, how it impacts the business? Thank you.
Yeah, we can. I will say, of course, we're in a very dynamic situation. Who knows what the tariff environment is going to be like tomorrow or 2 weeks from now or 2 months from now. But based on what we see today, we're pretty fortunate in the fact that if you look at our Electron launch business, much of the cost for that is really New Zealand born, right? And where the product is manufactured in New Zealand and launches out of New Zealand. Very few of our launches actually take place outside of New Zealand on Electron. And on our space systems business, we're pretty fortunate that, again, we're very, I say, domestically source intensive. So much of what we manufacture on the space system side are manufactured in the United States. Where they're not manufactured in the United States, they involve a high U.S. content on the materials or bill of materials that go into those non-U.S. produced parts. You can think of things like our reaction wheels that come out of Toronto. When you actually look at those reaction wheels, there's a significant amount of U.S. content in the electronics that go into those, things like bearings and so forth. So I think overall we're pretty fortunate in the fact that we've got our manufacturing intensity largely kind of lined up where we don't have a lot of exposure. But again, things could change. We don't, I think we don't have a crystal ball as to where things are going to be, in the future. But we think we're positioned better than most given the current environment.
I appreciate it, guys. Thanks and good luck.
Thank you.
Your next question comes from the line of Ryan Koontz with Needham. Ryan, your line is open.
Great, thanks. I want to ask a little about the new products and kind of the pipeline of opportunities for that. Maybe starting with your new solar array products. Sounds like they're modular, and maybe you can expand on kind of target applications for those products.
Yeah, hey Ryan. Sure. So on the star arrays in particular, we had a lot of customers coming to us with quick turn opportunities where they need to get on orbit super quick. And the Solero business had built a very nice way of building cells and panels and produce high quality things, but the like super quick, here's a complete array. It's not really a product that's readily available in the US right now in the market. So we saw that as an opportunity, given kind of what customers are asking for, and it's a very modular thing, so you can add multiple kind of panels to the array, and it just gets our customers on orbit much faster. The total opportunity for that product, we'll have to wait and see. I mean, we can only go off on what we see customers asking for, but we're very commercial in these things. Like we need a certain number of evidence of inquiry before we make those investments. But it also enables the company as a complete array manufacturer. Typically, historically Solero has just made cells and some panels, but since the integration with Rocket Lab, now we're able to add all of the other elements, deployment mechanisms, hinges, and whatnot to produce these entire arrays.
Got it. That's really helpful, Peter. Thank you. Then you mentioned opportunities in Europe. Can maybe summarize those at a high level? I assume maybe there's some sovereign government programs and as well commercial as well. Maybe you can expand on Europe.
Yeah, so Europe, we've been thinking about how we get into Europe for quite some time, because Europe is a very protected market, especially with the government programs through ESA, and having a business that's able to work in those programs and having a footprint on the ground really does not just open us up to be able to provide solutions of the satellite terminals, but communication terminals, but basically a lot of our products. So it's actually pretty exciting TAM expansion opportunity for us, because it's, like I said, it's typically very, very difficult to get involved with these larger European programs unless you have a footprint there.
And Peter, is that mostly from the space systems perspective, or are you thinking launch as well?
Mostly space systems. I mean, yes, that's the prominent opportunity for us here.
Perfect. Thanks so much. Appreciate it. That's all I've got.
Cheers. Thanks.
And your next question comes from the line of Andre Madrid with BTIG. Andre, your line is now open.
Peter, Adam, thanks for the question. Real quick, touch on Solero. I understand, maybe an update on the backlog there. How are things progressing in terms of working through some of that lower margin work that you guys still had? I know it was targeted to be done already, and you guys are continuing to work towards that. So maybe just a status update.
Yeah, I can take that one. So we actually have done really well in driving the margin improvement in that business. When we acquired it, was it maybe 2.5 years ago? It was about, almost 3 years ago now. Time flies. It was about a high single-digit gross margin business, and if you look at actually the results this quarter, we've gotten it to pretty much the model that we said we were going to get it to. So I think we've maybe we were a couple quarters later than we were, maybe 2 or 3 quarters later, but I think overall we've gotten it to where we want it to be. And I think more importantly, it's been a very strategic addition to the portfolio and lets us be much, much more competitive when bidding on these solutions to be a prime supplier into these growing constellation opportunities. So yeah, I'm very happy with where we've been able to drop the gross margin progression on that business. And I think we've, hopefully we have more upside to come on that, but I think we can check the box that we've gotten into that neighborhood that we had originally promised we would.
Yeah, no, I'd agree. Glad to hear that you guys have achieved that target. On Mynaric, maybe just touching on the supply chain. I think when you guys announced the acquisition, you mentioned that sourcing some key components due to shortages was somewhat difficult. Some semis and some semi impact there, and that was barring your ability to get, or their ability then to get product out of the door. Is that still an issue? Or measures looking to be taken to, I guess, improve things on that front?
Yeah, I mean, I think some of the supply chain issue was obviously, the company's distress. If you're a supplier into that, that's a kind of a challenging place to supply into and make investments against. Obviously, that goes away with Rocket Lab's ownership, so at least some of those supply chain issues get resolved.
Got it. And then if I could just squeeze in one more. I mean, you guys talked at length about, neutron reusability and the value of that, which was super helpful. But can we get another update maybe on electron reusability? Some milestones to look forward to?
Yeah. So electron reusability is, we've kind of paused that to put all efforts and all team on neutron. We had an extremely talented reusability team on electron, and as we look across the business and where the priorities lie, it's really is we can get a much bigger bang for our buck with all of those engineers working neutron and taking their experience over there. So it was just a priorities decision that we've made within the company. It's obviously a neutron sticker price is 55 million. So if you can get the majority of that back, it's a much bigger impact than a rocket with a sticker price of 8.5 million. So yeah, it's just a priority call within the company that we'll put that on pause until we get neutron to the pad and flying. And as Adam said before, it's all hands to the pump.
Yeah, no, definitely. So those engineers were just moved over from one program to the other. No loss there, right? On a headcount basis.
No, correct. Yeah. No.
Got it.
They've yeah.
Excellent. All right, I'll leave it there. Peter, Adam, thanks so much.
Thanks, Andre.
All right, your next question comes from the line of Matt Akers with Wells Fargo. Matt, your line is now open.
Hey guys, good afternoon. Thanks for the question. I wanted to ask a couple on the federal budget. I guess one on Golden Dome. Just if you guys are involved in some of the discussions there, is there maybe an opportunity on kind of the space layer there? And then I guess the NASA budget was proposed to be cut pretty substantially. I don't think you guys have a ton of kind of direct exposure there, but just curious if that's a risk if that does end up going through Congress.
Yeah, hey Matt, good question. So, firstly on the Golden Dome, yes, we intend to be, a significant player in there. I mean, we've already established ourselves as a prime contractor into national security programs, and as Adam mentioned, part of the reason to change the structure of the company into the corporation better enables us to address some of these, very important national security programs. So no, I would think we feel very good about Golden Dome and the capabilities we have, not just in space systems, but within launch and across the full gambit of opportunities there, for sure. And then on the NASA side, you called it right. We don't have a tremendous amount of NASA work. We always, I personally have a bit of a soft spot for those interplanetary missions, so we always like to go after those, and we continue to be a trusted launch provider for NASA. But NASA doesn't form a tremendous amount of our our pipeline nor our backlog.
Yeah, got it. All right, thank you.
Your next question comes from the line of Suji DeSilva with Roth Capital. Suji, your line is now open.
Hi, Peter. Hi, Adam. Adam, maybe on the financials, maybe a nitpicking question, but the percent of backlog that's recognizable in the next 12 months seems to be trending up on a secular basis. I would have thought if you had more multi-year contracts, that would trend down. Am I thinking about that correctly, or maybe you could clarify something?
Yeah, well, and the backlog is it's a bit dynamic. I would say that if you look at the duration of the program, like take the big let's pick the SDA program, for example, and the Globalstar MDA program before that. they typically have the meat of the revenue curve is around 3 years. There's a little bit of a tail, kind of on the front and back end of that, but the bulk of the revenue recognition is within a 3-year window. And even more so, if you kind of look where the area under the curve, even more, it's really concentrated at about 18 months. And this really comes down to, you earn some revenue as you're doing the work to kind of finalize the platform design and get through some of the early milestones of design reviews and so forth. But the real direct bulk comes when you're actually taking possession of materials, like bill of materials, because that's where the majority of the cost, and under the EAC methodology of RevRec, that's really where we get the majority of the revenue recognition. So you'd think it'd be like stretchy, a little more stretchy than it is, but it's really not. It's much more compressed than you think. So kind of when you think about where we are right now on, for example, SDA, where we announced that program at I believe it was the end of Q4 of 2023, we're call it almost 6 quarters into that, and now we're really kind of heading into the real meat of that RevRec cycle, right? So think of the majority of that revenue recognition is really going to happen now over the next 6 quarters at most. So really, the next 4 quarters are going to be pretty heavy, and then they start to trend down, which is why we talk about a lot of focus on backlog, which is appropriate, and we have all of our focus right now. We've talked the last few quarters about the importance of putting the next big piece of backlog on the books, and that's what we're focused on. And there are several, as Pete mentioned, that we're chasing, including ones that are pretty well known, like obviously the next tranche of SDA is due for submission really, really soon, and we think we're well positioned to participate in that, as well as some other programs, commercial and government. So we think we're in really good shape there, and on the space system side, the components business is largely less. It's not the really multi-year deals. It's much more kind of in the nearer term, say 12 to 18 months. And when you look at the launch business, I mentioned earlier, getting through some of these kind of program on-ramp gates was really the milestone or the prerequisite to really opening up some really big, meaningful opportunities, particularly for Neutron, right? So I think you're going to start. We've kind of knocked down all the barriers to start really kind of building that backlog in a more meaningful way. I mean, $1 billion is nothing to be ashamed of, but we think that has potential to grow significantly now as we've kind of got to the next phase of these big satellite programs that we think we're in good shape on, and also being on ramp for Neutron exposure. So yeah, I think it requires a little bit of patience, but I think people, when they look back over history, have seen we've been successful in converting opportunities into backlog, and we think we're even more confident now than we've ever been on being able to do that.
Okay, Adam, that's very helpful. And then this question maybe a little further out, thinking about sort of Neutron and sort of the landing infrastructure strategy longer term. I wouldn't have thought about this for a few years, but it's this AFRL announcement you had today about being a global logistics provider for them. I'm curious, is it more than one ROI barge globally, or what are the elements of kind of reentry and landing for Neutron that require investment potentially?
Yeah, good question. So it's it's primarily just a barge. It does have return to launch like capabilities as well, and as cadence increases, then there could be further assets needed to be deployed in forms of additional barges. The point-to-point cargo, look, that program is really at the very beginning, of its development within the US government. So I think we're very much in the experimental phase, and it'll be interesting to see if that turns into full requirement for an operational capability. But it's good to be on that program and working on it early.
No, fair enough. Appreciate that, Peter. Thanks.
Cheers.
Your next question comes from the line of Jason Gursky with Citi. Jason, the line is now open.
Great, thanks. Hey, Peter, you mentioned in your comments about Mynaric that they've got quite a bit of backlog and are struggling with getting shipments out. But what I thought was more interesting about your comments, though, was how you might utilize that technology in future constellations that you plan to build and operate on your own. So I'm just kind of curious, the strategic rationale behind purchasing Mynaric. Was it more for that purpose and enabling your future constellation, or was it more to be a merchant supplier?
Yeah, hey Jason. To be honest, both, and you can see that being consistent across all of our components businesses. Solar, traction wheels. We build good merchant businesses, profitable merchant businesses, and we're happy to supply to everybody in the world. But also when it comes to building our own thing, we need a reliable scaled supply of components for our own aspirations. So the space industry, as you well know, is full of subscale manufacturing shops for these space components, and as we see many of our customers struggle to build volume and build quickly because of that. So we're really trying to solve two problems here. One is be that merchant supplier at scale for the industry, and then, as you point out, when it comes time for us to build our own stuff, then we already have that capability at scale, and we're just methodically going through every element of the satellite that we're going to need now and in the future, and when opportunities present themselves, we take advantage of that.
Okay, yeah, fair enough. Thank you. Another one for you, Peter. I'm just kind of curious on transport. Maybe you step back and provide some context for us all, and what you think the unique features of the SDA transport layer, kind of envisioned by your customer and the way that you understand it. What's unique about it relative to what the customer there might be able to go and buy from the commercial market today? So you've got commercial communications providers out there today. Maybe provide some context on why they need to continue on and go do SDA tranche, additional tranches on the transport layer versus just going and buying commercial.
Yeah, good fair question. So you have to think about what SDA is trying to do as a holistic thing. So as you point out, it's broken up into transport layers and track layers and custody layers and a whole bunch of different layers. But when you stand back and you go, okay, what is trying to be achieved here, and what elements are critical and what elements are not? So you have to think about it not just as a particular satellite, but as a system, and that system needs to be interoperable between all of the current existing infrastructure and all of the future infrastructure. So look, it's a fair question to say, well, can transport be done commercially? But the thing is that it has to be completely interoperative with all of the DoD standards and security, all of the spacecraft that are both on orbit now and plan to be on orbit in the future, and meet all the requirements of the entire program. And often with a lot of space technology, like everything's a trade, so you end up having a pretty tight requirement set that you have to solve for. So it's not unreasonable to think that commercial providers may be able to provide a transport or some of the transport layer, and I think that's the question that SDA and the Pentagon are trying to answer right now. But the important thing is that it's one layer of many layers. So our focus here, although we have a transport layer and we'll continue to bid on transport layers, our real focus is on things like the track layers and the other layers that are out for tender right now, because we think that those are, well, certainly those are not being able to provide from commercial assets, and there's a lot more to the SDA program than just that one transport layer.
Right, and that's a perfect segue into my final question, which was about the pipeline. As you look at your pipeline for constellation builds, and I would consider this transport layer that you're working on now to be a constellation build.
Sure.
Do you think you're more likely to see government constellation builds, like the next announcement comes along? Are we likely to see more government wins from you all, or are you trying to balance this out, and we could very well see a commercial one? Just kind of curious how you're going to market at this point. Thanks.
Yeah. Yep. Well, I mean, so not to sound at all arrogant, but we have the luxury of picking and choosing the kind of work that we want to go after and the things that we think are strategic for us as we think about our future. And that is a mix of both government and commercial, both in kind of either smaller numbers of satellites or small volume constellations that we think are strategic technologies or things that we want to do, but also for also large scale. And I would say that the majority of the effort within the BD team and within the senior management team are really focused on these much larger constellations. Partly because that's where we want to go, but also we've kind of reached the maturity and the scale now that we really can competitively go after those. As we've talked about on this call, we're very vertically integrated with a lot of the really pain point satellite components at scale. And we've demonstrated we can do really technically difficult missions, and we've demonstrated that we can be a prime for national security projects. So, I'd say that we've really kind of, moved up a flight of stairs on all of that, and the opportunities that we're looking for are much more, larger and needle moving opportunities, but both across commercial and government. So I hope that answers your question.
Great, that's helpful. Appreciate it.
Your next question comes from the line of Michael Leshock from KeyBanc Capital Markets. Michael, your line is now open.
Hey, good afternoon, everyone. I want to stick with the satellite constellation topic, and you had mentioned the potential for government contracts that could be to build the entire satellite constellation. How do you think about prioritizing that type of work versus building your own constellation first?
Yeah, well, I mean, that is a good question and something that we talk about a lot. But the most important thing for us is to build a large, scalable, profitable company. So we're not about to embark on huge R&D projects that kind of would make that a much more far out goal. So the answer to the question is probably not a very good answer. Is that we balance that, right? We look at those opportunities, and I can say that everything we've done to date, leads us to that point. And when we have a full conviction and thesis that we can talk about around what kind of constellation that we intend to go after, you really have to have that extremely well baked, because at that point you're committing significant resource to go after those kinds of things. So yes, I mean, like I say, the focus is on strengthening the company, and we're moving as rapidly as we can into constellations and where we think is important, but we're not going to do that at the cost of the security of the business.
And then shifting to Archimedes, how long are you targeting that engine to burn for a full launch? And maybe what's the duration of the hot fires that you're doing today relative to that full burn expectation?
Yeah, so I mean, a full duration second stage, upper burn profile is on the order of sort of 5 minutes, and where we're targeting the testing right now, it's really all about all of the startup and shutdown transients and all of those things. Once you reach thermal equilibrium, when the engine's just running at thermal equilibrium, you're not learning anything, because everything is in a steady state. You're just burning propellant at that point. So our focus has not been on big long durations. Our focus has been on all of the operating conditions that we need to meet, especially on a reusable launch vehicle. When you come in for landing, one of the more challenging things are your propellants are hot, and they're at different pressures. So that's a far more challenging environment to be able to reignite an engine than a steady state burn. So that's really been our focus.
All right, thank you. I appreciate the color.
Your next question comes from the line of Eric Rasmussen with Stifel. Eric, your line is now open.
Yeah, thank you for taking the questions. Maybe just circling back with mine, Eric. I remember in the press release, or it seemed like the deal was contingent on, I guess, acceptable terms to Rocket Lab, and it sounds like in prepared remarks you seem a lot more comfortable on closing that transaction. So, are there any sort of sticking points remaining to closing this deal at this point?
Yeah, hey Eric. I'll make a few comments, and Adam probably have better ones. But it has to go through a whole process in Germany, and that process can take some time, and that's probably the longer pole in the tent, and it's not really a process that we have much kind of control over. The bankruptcy laws and stuff are different in Germany than in the States. But I don't know, Adam, you might have a better comment.
No, you're exactly right. It all comes down to regulatory, and there's a couple of regulatory processes that you got to get through. But the first one is to really get through the bankruptcy process over there in Germany, which there's a court date that's scheduled, and so things are progressing. I think we've always had confidence where with our deal that we have with the primary lender here, and that's why we have confidence in kind of leaning forward and announcing the deal. So everything seems to be on track. I mean, I think the difficult thing now is trying to predict kind of how the regulatory process will, the timeline for that. But we feel good about where we're at, because we have a committed plan to, as Pete mentioned earlier, to invest in that business in Germany. There's great technology, there's great intellectual property. We're going to continue to invest in it. We're going to have what we believe to be a thriving merchant business supplying the broader ecosystem. So yeah, we have no reason to be concerned at this point.
Great. And then maybe on the satellite, since I guess announcing that spacecraft, what sort of feedback or interest have you received? And then maybe any updates on progress thus far, maybe timing of bringing that spacecraft to market.
Yeah, I mean, we have strong interest from commercial and government constellation providers, and the satellite really is the gold standard for high volume, high cadence kind of deployments of constellations. Also useful for ourselves, of course, but that was really a product that was developed and driven by a set of customers.
Okay, and maybe switching gears on the NSSL program, obviously, a big opportunity there. You received a $5 million task order, but at what point, I think you've gone through a pretty rigorous process just to be on ramp for that. But at what point can we expect to see, or are you expecting to be able to book backlog for that? Is it contingent on that first flight, or what are the milestones that we can potentially look for that maybe get more excited about that program?
Yeah, totally. So the team now works with us for the next few years on all of the elements of mission assurance and everything that they need for these critical missions. And yes, we're eligible for task orders after the first flight. But between now and then, as you can see, there's already task orders that occur for various elements of getting mission assurance and mission ready to be able to fly these kinds of payloads. But truly, it's after first flight we're eligible to bid for those task orders. The phase 3 set of task orders go through to 2029.
Great. So really getting to the pad is a key milestone. And then maybe just finally on Electron, I think, Adam, you talked about higher ASPs. Q1 obviously was lower, but you expect to see an improved cadence. would you expect, though, the year to end at a much higher rate, or just slowly pick up from here in terms of an ASP? So, and obviously there's some lumpiness, that you've talked about with some of these volume deals.
Yeah, right now the backlog would basically imply a step up in both cadence and ASP progressively as we move through the year. So I would expect the high watermark on ASP would be in the Q4 period. So we'll see a progression. It's better in Q2 than it was in Q1. It'll be better again in Q3, and it'll be, we'll kind of hit a high watermark in Q4. And I expect that to be both the case for both the ASP and for cadence. And that's really what kind of gets us to that target margin that we talked about. I mean, just to be clear, when we've talked over the past several years, like, well, when we get to a certain point where we're approaching, a couple launches per month or 6 per quarter, that's kind of our goal to get to our target margins in the 40s. And I think everything that we're seeing right now is consistently kind of playing, getting us towards that. I think we're pretty pleased with how things have progressed. It's pretty much almost exactly the plan.
Great. And that's still, that's 20 plus launches for the year.
Correct.
Great. Thank you.
Your next question comes from the line of Andre Schroeder with Cantor Fitzgerald. Andre, your line is now open.
Hey, everyone. Good afternoon. This is Andre Shepard. Sorry about that. Hey, Peter. Hey, Adam. Congratulations on the quarter and all of the accomplishments. I think most of our questions have been asked by now. Wanted to maybe get your thoughts, with the international space budgets growing, how do you expect this can benefit Rocket Lab? Where do you see the most demand from international coming across launch, satellites, and components? Thank you.
Yeah, hey, Andre. So primarily Europe, and Electron has done incredibly well in Japan. So the Japanese market is like the second biggest market for Electron. But as we think about larger opportunities and programs, I think it really sits with our allies in Europe.
Got it. Okay, that's helpful. And maybe just as a quick follow-up, and again, a lot of our questions have been asked, but and I realize I think we touched on this last quarter as well, but as we're getting closer and closer to Neutron, do you have maybe a better sense now how you foresee your revenue mix shifting? As I look at the backlog, there seems to have been an increase in launch systems over space systems from the last reported backlog. As we're getting closer to Neutron, how quickly do you foresee that shifting towards launches over space systems, or how long would that transition take, I guess, in your opinion? Thank you.
Yeah, I'll take a pass at that, Pete. I mean, if you look at our back, I mean, we're dealing with such large opportunities right now that it's going to be very volatile. I don't think you're going to be able to predict a smooth line or extrapolate a smooth line. One large constellation win will skew everything much more quickly and dramatically back to a balance of maybe more than 2/3 of our revenue from space systems. But you'll also see as we now been on ramped to some of these programs to sell, every Neutron launch that we book, if you look at our target price for Neutron in the $50 to $55 million ASP range, that's going to move the needle as well. And if you can get some bulk buys going on that could also skew things so that we could be more than 50% of our backlog to be launched at some period of time. So it really depends. It's so hard to predict. And the good thing is we've got multiple irons in the fire, and both launch and space systems have almost equal opportunity to kind of really move the needle. I think because right now space systems has become a dominant piece of the revenue mix because of the size of those programs we've been chasing and the breadth of that business versus today having Electron, which is a phenomenal product, getting to our target margins. So that's really gone well. But at $8 million, $8.5 million, $9 million, it takes a lot more to kind of skew things in the launch's favor. But now Neutron resets that table. So I think it's hard to call, and it's going to be very volatile. But the good thing is, we see that trying to see which one's going to grow faster and move the needle the most is a great problem to have because they both have strong tailwinds to them.
That's very helpful, Adam. Really, really appreciate that color, and congrats again to the team. I'll pass it on.
And your final question comes from the line of Ron Epstein with Bank of America. Ron, your line is now open.
Hey guys, this is Alex Preston on for Ron.
Hey, Alex.
Just one quick one from me to close us out. I'm thinking about the NSSL on-ramp for Neutron. I'm curious if you think how you're thinking about potentially transitioning to Lane 2 awards in the future, the more demanding launches. Is it a matter of just demonstrating flight heritage over a number of missions, or do you see incremental capabilities you'll need Neutron to demonstrate?
Yeah, thanks for the question, Alex. I wish it was that easy. The other lane requires you to have a launch site at both Vandenberg and at the Cape. It's very explicit about that, and be able to meet all of the mission requirements for all of the space launch, meaning that you have to have a vehicle that can lift, sort of over 30 tons. So the cost of admission to get into that lane is extremely high. Hence the reasons why historically all of those programs have been, quite heavily subsidised in R&D contracts and whatnot, and sustaining contracts, because you have to hold and maintain a tremendous amount of infrastructure, 2 pads and a heavy lift vehicle. So unless the rules change, I don't think we'll graduate up into there. But to be honest with you, that this is one of the reasons why NSSL and Space Force created this extra lane, is they saw that there's a huge lost opportunity with some medium launch vehicles in development, and wanting to make sure they take advantage of those, and it'll be really interesting to see in time how many of those missions fall from the various lanes, drop down into the lower lanes that are much faster and much more affordable to deliver.
Got it. Thanks, guys. Really appreciate it.
All right. Thank you so much. This does conclude our Q&A section for today. And with that, I will hand it back over to Peter Beck for our closing remarks.
Cheers. Thanks very much, everybody. And before we close out for today, here are some of the upcoming events and conferences that the team will be attending. We look forward to sharing more exciting news and updates with you there. Otherwise, thanks very much for joining us. That wraps up today's call, and we look forward to speaking with you about the exciting progress we're making at Rocket Lab again soon. Thanks. Bye.
Thank you so much for joining us today. This does conclude our conference call. You are now free to disconnect. Thank you.
All right. What do you guys think? Also, the comment section. Did you guys think it was a good call?
I'll let you go, Scott.
I thought it was a fine call overall. Not really talking about the I guess the quantity of the call, but I thought, and not that it's a big surprise, but we do have that key man risk, and just Adam kind of stepping up. It's I don't know. The Rocket Lab team just never ceases to amaze me, and it seems like whether it's Adam, whether it's Peter, whether it's literally name them, it just seems like everybody's kind of firing on all cylinders. It's good to see. Good to see that nice mesh between everybody. What are you guys feeling?
I think the thing I was most surprised about was the consistently pushing for Europe in the conversation.
Mm-hmm.
And
me too.
I thought it would be a little bit more quiet. There's only one deal so far of really, to me, my knowledge, really pushing for launching out of Europe, and that's kind of the UK. And so to kind of iterate it multiple times, I mean, granted, maybe I'm being a little bit silly, because now the Mynaric deal will allow them to kind of take a foothold in Central Europe with Germany, and then you'll potentially be able to get the hypersonic piece with the UK. And I've stated this before briefly, but maybe it's worthwhile to go a little bit more. If you actually do some research with hypersonic testing and capability within Europe, it's actually very poor. And the first opportunity they may be able to get anything in terms of hypersonic operations at its earliest would be 2030, and even more so people are thinking that'd be closer to 2035. And so being able to outsource that, utilizing an American company like Rocket Lab, would really accelerate the ability for them to defend themselves. And I think they basically stated that very early on in the call, right? Anybody that's an American ally can potentially utilize this contract. So it's interesting to hear that's continuing to kind of work and potentially. I don't know. It's just an interesting conversation. I mean, we had the same one. I don't know if it was after the 2Q call last year, so 9 months or so ago. Basically, like, will Haste launch other than Wallops? And the answer was yes. So just now you're starting to see it kind of come that way. And another thing that I was doing some research on specifically, and I didn't want to interrupt you were saying something and we didn't have much time left. I think we were talking a little bit about the reason for lasers rather than radio frequency on satellites and communication. And this might be a reason why Rocket Lab is so much in favor of looking at Mynaric for utilizing laser frequency, or not laser frequency, but lasers instead of radio frequencies. And so I just asked specifically into Grok, what would be the benefit of using lasers to communicate with satellites rather than radio frequency bands? And the statement was, and apologies, this isn't really call related, but it hopefully gives a little bit of context as to why Flatellite might be focusing specifically on lasers. Using lasers for satellite communication, optical communication, offers several advantages over traditional radio frequency bands. Higher bandwidth, I think you stated something like that, Scott. Lasers operate at much higher frequencies, optical spectrum rather than radio frequencies, allowing for greater opportunity for data rates to move back and forth. This enables transmission of large volumes of data, such as high-resolution imagery or videos, in less time. Narrow beam divergence, so laser beams are highly focused, with much smaller beam divergence rather than radio frequency signals. This allows for precise targeting of satellites, reducing signal loss and enabling communication over longer distance with less power needs. Increased security. This is the thing that I've always been thinking about with respect to Flatellite in general. It seems like it's going to be more individual company focused or individual agency focused rather than broad focused like you have for Starlink or you have for AST Space Mobile, which is more so going for more wider public applications. Flatellite always seemed like it was going specific for kind of like a VPN, virtual public network or private network rather than specifically a public network that anybody can use. That's the kind of way that I've been thinking about it. But specifically what it says here for lasers, increased security. The narrow beam makes it harder to intercept or jam compared to radio frequency signals with spread over a wider area. This enhances the security of the communications link. And then there's also less congestion. Radio frequency bands are obviously heavily regulated and crowded due to the widespread use. Optical communications avoids congestions, operates in an unregulated optical spectrum, reducing interference and licensing issues, and improves signal qualities as well. Less susceptible to electromagnetic interference and can degrade that which can degrade radio frequencies. So leading to clearer, more reliable data transmission. And they're really the only challenges. Laser communication has challenges such as sensitivity to atmospheric conditions like clouds, turbulence, for ground to satellite links, requiring adaptive optics or ground station diversity. Precise pointing and tracking are also critical due to the narrow beam. And then overall laser-based communication is ideal for high data rate, secure, efficient satellite links, particularly for deep space missions or high throughput applications like Earth observation and internet constellations. There you go. Sorry, just wanted to get that in there because I feel like it's been asked a couple times.
Thank you for that, Matt. So Scotto, anything that stands out for you?
Nothing too crazy. Just kind of looking at that new Neutron launch, and if we are expecting the 3 within the year, it has me wondering if maybe that the re-entry mission is going to be the second Neutron launch. The reason for that is the confidential one, the first of the 2, is starting from mid-2026, so we'll call that second half of 2026. The Venus Lifefinder, I think the window for that is in the second half of 2026 as well. So it kind of leaves the first half of the year open. So I'm wondering if, like, of course they could stack all three into the second half, but it's probably more likely that we see that in the first half of the year. So I'm sure that could change as well if the barge attempt for 2025's launch is not the barge attempt, the soft landing. Like if everything goes really haywire, probably not going to try a re-entry right away. But yeah, that's really it.
Yeah. Cool. I mean, yeah. For me, it was also, I was very surprised on this Europe thing because I thought on one of our interviews with Sir Peter Beck, he specifically mentioned like, Europe, if we're gonna go in there, I will never get to sleep. And he was, I kind of felt that was for him like a no. But yeah, maybe he will delegate so he can still sleep.
I hope so.
Yeah, and I want to see with the audience if anybody knows anything, which companies it could be. I mean, there was recently this news that New Zealand and UK are strengthening ties, and I think it was 2 Rocket Lab Weeklies ago when we spoke about it. So I think there's a big chance that would be something in the UK. Obviously, they have something in Germany. When we speak with Sir Peter Beck, I want to ask him if they want to come to Sweden. Then I can help them if they want. I don't know if I can help them. I'm in South Sweden, and apparently there's a launch pad that I think Firefly bought or is using that is like very, very up north. I think if I would drive with the car, it's like 16 hours drive from here.
Oh wow!
Anyways,
that's pretty aggressive. The only other thing, man, it was just at the tip of my tongue as well. I forgot. Sorry.
I was thinking about the backlog more because Adam Spice specifically said that you're not going to be able to think with the backlog, and there can be very needle moving things that happen. Like for example, we get government constellations or we sign Neutron contracts. And I just want to remind everyone that the backlog, the way Rocket Lab calculates the backlog is when the customer orders it in a, how do you say it, like in a non-reversible way. There's probably a much better way of saying it. You guys can maybe help me out with it. So the point is that if you look at what happened in Q1 or what has been happening recently, like they joined the NSSL program. That's a multi-billion dollar program that they got eligible to do, but they cannot count any of that into their backlog. Yet it was a huge sales step, at least for me. Then the new Kratos contract that they have, that's also a multi-launch agreement with very expensive haste launches, but they cannot count it into the backlog until the things are fully ordered. So, and there is also the UK contract that's also not counted into the backlog. So I think that focusing on the backlog and saying that it's really bad because it's not moving is being a little bit short-sighted and maybe not understanding these things that I laid out here.
Yeah, the other remaining thing that I wanted to kind of highlight is really they're continuing to push down and double down on defense, and that obviously was a piece with Europe, but also the Golden Dome. They're obviously still seemingly bullish that they're in contention for that. And I know some people have had some questions about whether or not that's going to be just blanketly given to Elon. So it seems like they at least feel confident that they'll still be in the running for that. And then same thing with the STA Tranche 3. I think some people were questioning, is it off? Is it on? And STA themselves even tweeted out that it is on, and that Rocket Lab obviously is now kind of a prime contractor of the U.S. government, and seems to be they feel like they are well poised to be able to continue to bid for those contracts. And I want to continue to remind people, they feel like they're confident, not just from a satellite building perspective, but for potentially launching them as well. Granted that they can, I think, start launching those, at least the Tranche 2 ones that they're kind of working on, starting in 2027, 2028 is when they plan on beginning to launch those. So that contract is yet to be awarded. And last I heard, I think from when Adam was at TD Cohen, they were talking about specifically bidding for those contracts. I haven't heard anything about them yet, so I'm curious to see what's happening with that. But then keep in mind, that means the SDA Tranche 3 has yet to be, for a launch perspective, is yet to be awarded as well. So you still have lots of different contracts up in the air that still need to be bid and won. So I will say that the conversation today eased my concern a little bit about the backlog and not actually seeing it move. But overall, I'd still like to see it move. So.
Okay, cool, guys. I must admit it's past midnight over here, and I've had sick kids the last few days, so I'm like trying not to fall asleep. So I think I have to call the call here, unless you guys want to live stream me falling asleep. But I don't know if you two want to continue. And
I have to take a nap as well. I still have to do some work for something. I have to be up at 4 a.m. myself, so I need to get some shut eye because I was up early today for an international call, and I have to be up early tomorrow morning for an international call as well. So, unfortunately, guys, but I might do a Cash Flow Chronicles with Mr. Patel. So keep your eyes open for that. And Scott, if you're around, you're more than welcome to join that as well.
Cool. Sounds good, man.
Awesome. Well, thank you guys, and thank you to the audience for everyone being here. I think overall this was a good call. I'm very happy. If the stock drops, I want to sell something so I can buy more.
I would love to buy more.
Yeah. Awesome, guys. See you. We should probably speak about the interview, and but we can do it.
I guess we'll talk on Saturday, and then maybe again on Sunday.
Yeah.
Yeah.
Cool, guys.
Thank you all.
Talk to you guys soon. Thanks, everybody.
Ciao, ciao.